This is the CEO Barbecue. My name is Antonio, and today we're looking for gold in the Abitibi Greenstone Belt of Quebec, together with Rick Mark and Louis Martin of Harvest Gold. As always, this is going to be a long, in-depth conversation, so feel free to use the timestamps provided in the description and on the time bar to better navigate the video. And if you want just a quick 10-minute summary of this conversation, go to resourcetalks.com for the written version of this and all of our previous interviews, as well as consider subscribing to our free email list, which sends a weekly summary to your inbox with all the interviews from the prior week in bullet point summaries. And before we get into anything here, I would like to warn you that we have received no monetary compensation for the production of this video from the company that's being interviewed. However, please understand that this channel is a business that sells content producing services to companies, which means you cannot rely on this video for research, and you should treat this as an advertisement instead. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. And please only proceed if you know what you're doing. This interview is intended only for experienced junior mining speculators, because mineral exploration, development, and mining is a very tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, so before continuing on, please talk to an investment advisor with a good long-term track record, because your capital is at risk, and I am not a financial advisor, and I do not have a good long-term track record. If you're not 100% sure you understand 100% of the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Harvest Gold is listed as HVG on the TSX Ventures Exchange, where over the last 3 months, an average volume has been detected of 230,000 shares. The stock's 52-week high is 8 cents and its 52-week low is 2 cents. With a market cap of just under 5 million Canadian dollars and just over 88 million shares outstanding, today this is a 5.5-cent stock with a 50 and a 200-day moving averages at respectively 4.5 and 4 cents. According to the year-end financial statement, there are 17 million warrants outstanding, and almost 13 million of them don't expire until September of next year, and they have a 7-cent exercise price, and another 4 million expire in about a year from today on May 31st, also exercisable at 7 cents. I can also see about 3 million options outstanding in the same financial statement at a 20-cent weighted average exercise price. However, it is worth noting that an additional almost 25 million warrants were issued after this financial statement was published. They were issued at 5 cents relating to a financing that I'll tell you more about in a second, and they don't expire up until March of 2028. All in all, that brings the number of fully diluted shares to about 132 million, meaning an increase of about 50% can be expected if all dilutive securities get exercised, which would then result in about a 33% ownership dilution if, and it's always a big if, but if those actually get exercised. Crescat Capital is a large shareholder here. They own about 18.8% of the company as of the last financial state, or as of the last financing, actually. Management owns a couple of percent of the company as well, but we'll talk more about that later on. Moving on, I'll be looking in more deeply into that financial statement, the latest of which, again, shows us the numbers as of December 31st, 2024. So keep in mind, this is pre-financing, but the asset side of the balance sheet at the time held just about $250,000 in current assets, most of which, so 180,000 to be specific, at the time was in the form of cash, with some tax receivables and prepaid expenses on top of that as well. The liability side had in total about $190,000 on it, mostly in current liabilities and specifically in the form of account payables and accrued liabilities. Now, the recent financing that I keep mentioning here, it was closed on April 21st. It did have the company issue an additional 24.6 million shares. It was done at 2.5 cents, and it brought in a total of $615,000. So the balance sheet that I just walked you through looks different at the time of recording than it was at the end of last year, of course. Moving on to the P&L for the 9 months that ended on December 31st, Harvest recorded just under $350,000 in operating expenses, which is an average of $38,000 a month. And the largest chunk of that administrative spend was consulting fees, management fees, and professional fees combined. And when you combine them, they accounted for about 76% of the overall G&A. And marketing was a total of $38,000 for the whole 9-month period, or a little over 11% of the overall spend. There was some exploration spending in here as well, but the exploration expenses here get capitalized. So it's note 4 in the financials that provides a detailed breakdown, where I can see that about $300,000, 285 to be specific, was recorded as geological and field costs for the period. And that's about a $31,000 average exploration spent, and that's a monthly average. As always, I've got two ratios for you here. First of all, the exploration to administration ratio. That's basically, it's actually below 1 here, meaning more money was spent on running the company over the 9 months that ended on December 31st than exploring the projects. And it was about a 55 to 45% split, which is something, again, I'll be asking about later on in the conversation. And then there's normally also the drilling to marketing ratio that I typically give you here. But again, no drilling occurred in the last 9 months, so that ratio won't work. But it is something that might be changing in the near future, as the company is hoping to be drilling in 2025. So again, that's something that will be part of the conversation later today. All in all, I do encourage you to go through their financials yourself and look for those ratios yourself, as I'm also not infallible. I do make mistakes in my reading and interpretation of these numbers. So be on the safe side and go look at their financials on setterplus.ca. That all said, enough accounting, at least for the next couple of hours here, a couple of days maybe, because again, we're going to the Abitibi, where Harvest has multiple assets, including the Mosso flagship property, which is it's the focus for the company right now. It's a 72 square kilometer property. It's adjacent to Goldfields and Cartier Resources. And it was previously operated by Vior, this property, actually. Vior is a company that I've spoken to before as well, but it was there essentially, or operated by them until late 2023, which is when Harvest signed an option deal on it with cash payments of about $2 million. That's over 5 years, this whole deal, as well as 12 million common shares and a $3 million work commitment, as well as a 1% NSR to Vior, which Harvest has to complete by, again, it's a 3-year thing, so they have to complete it by June of 2028, I believe, which if they don't, it then triggers an 80-20 JV with Vior. It's a bit of a complicated situation and a relationship there. So again, something that will be discussed in depth later on in the conversation. And a recent soil sampling program here has revealed some new potential drill targets, and their February presentation says that a 5,000 meter drill program costing $1 million is planned, or hoped for 2025, which again, given the state of their financials, is also something worth discussing later on. There are other projects in here, such as the Urban Berry, where Harvest also has an option to acquire it, though a simpler one and a cheaper one. But this is an early stage project with only some mag and surface geochem on it from 2024. So hopefully a brief update on that later today as well. And then there's also La Belle, which is another smaller property. It's close to Mosso. These three properties are kind of close to each other, though not adjacent to each other. And they're in a similar geological setting with, there's also potential strategic significance to it. But again, we'll talk about that later on. And as you can see in here, there's loads to discuss here today, which means that it's time for me to shut up and Rick and Louis, I suppose, give you guys the word here. But first of all, thank you for being here today.
Thanks, Antonio. Our pleasure.
Pleasure is all mine, of course. But this is your first time on the CEO Barbecue, so we've got an obligatory smell test to get through before we can actually.
May I say, Louis or Antonio, that you didn't tell me this was called the CEO Barbecue, and you didn't tell me we were doing a smell test. So I'm glad there's no one around me at this point.
Well, we're going to do at least a half an hour on the smell test before we can actually start grilling the meat. And we'll start off with you, actually, Rick. Who are you?
Louis, I hope I survive this.
I think you'll be fine. But tell me more about yourself. Who are you, and why do you think you're the right man for the job?
Well, I have about 25, probably now 35 years in the public markets in Vancouver. 25 years in the resource space. I had the chance 20 years ago running a little operation with 4 public companies. At one point, I think the top market cap for the 4 companies combined was about $200 million. Our star company was called VMS Ventures. We made a high-grade copper discovery in Manitoba, VMS. Very exciting. We were the belle of the ball in Canada for a couple of years, trading 500 million shares each of those 2 years. Strong Toronto support, ended up raising $20 million at $1.50, and then ultimately selling the discovery, which would become a small mine to Hudbay, which was the neighbor in Manitoba, which is very much like we have right now in Quebec, in that our properties are surrounded by gold fields. It's the obvious takeout partner, and eventually we'll be talking to gold fields. In fact, I intend to talk to gold fields in the next month about an upcoming financing. In terms of my personal history, I began my career as an educator. I was a principal in secondary system at the age of 29. So I think I've sort of seen myself as someone who leads, someone who enjoys the challenges of making organizations work effectively. I've taken that experience through a number of iterations. As it sits with an exploration company, it's critical that you have excellent geologists. Let me say first, Antonio, you better have a good lawyer. You better have a good accountant. You better have a good CFO. And then you never want to talk to them. And the shareholders need to know that we have that kind of structure behind us, and that we make sure that we're always in good standing with the various regulatory bodies. So that's a given. And the people that we're working with, that we've been working with for a long time. This geological team has been together. One of them, who is now the VPX for Hudbay Minerals, was my lead guy on VMS Ventures, a guy called Neil Richardson. And Neil actually, and the great fact that he's still staying on as an advisor with us while he's working very hard with very large exploration budgets with Hudbay. He has worked in this belt. In fact, he worked on Windfall before it was Windfall, if you like, before it became the deposit that it is today. So he has intimate knowledge of the belt. He was the first guy, Antonio, that said, we got to take this Urban Berry property on. So as you mentioned, its earlier stage, their CEO said, you've got to look at Maso. So that led me to the CEO of Vior at the time, and we ended up negotiating the deal you mentioned. Mm-hmm. But the reason I want to make the point about our geo team starting with Neil is these guys have been with us for a while. Len Brownlee is on our board. He's a past CEO. He is not a geologist, but has seen enough and has the brain enough that he behaves like a geologist. Pat Donnelly has been on our board now for 8 years. He is a geologist, also a past CEO. Henry Aumack joined us about 4 years ago. Remarkable background, very smart guy. And then Louis joined this crew through Pat Donnelly. So again, it was a situation where people that knew each other, trusted each other, came together. So I'll put that 5-person geo team up against any in the space, in the exploration space. And you'll talk to Louis later and learn a little bit more about his background specifically to these projects. So
I do have a couple of questions about your geological team that I do hope we can get to here.
Yes,
let's roll it back a little bit to what you just said. So with those 4 companies that were kind of in the group, they got to about a $200 million valuation combined at one point. What was the result of that? I mean, that you said you sold it. How much did you sell it for? Did shareholders make money on that? What did that look like?
In that case, the deal we did with Hudbay, we sold Hudbay the project. Oh God, let me see. It was we had in fact we had a 30% carry, and so they took it through. They took it over. And the great thing about that deal was it cost VMS shareholders nothing. So over time, then you're left with, do we make more discoveries? In fact, we didn't. We were ultimately taken over. I left the company in 2013. Its eventual iteration was in the hands of the guys that were left with it. I decided to step away for about 5 years and left that in the hands of those guys. They were taken over ultimately, and the rest of the properties were seen to be potential for gold in Manitoba, ironically. The key property, the Reed mine, ended up in Hudbay's production schedule and became a mine, and ultimately Neil of course went to Hudbay and had a chance to work on that. And so that was the end of that. There wasn't a moment where the company was sold, because early in the deal we had structured the carried 30% interest for VMS shareholders, which takes a lot of pressure off in terms of the money you have to raise to keep up with the costs of building a mine. The other 3 companies were in different commodities. Harvest Gold still with us. Pancontinental Uranium, which has had iterations since. We were fortunate enough to be in the time of uranium in 2000 and 2008. That stock did very well. We had a wonderful property in Australia looking for uranium. That morphed ultimately into a rare earth project, which gave me an opportunity to work and live in the rare earth community. And then the last one was a nickel project, Antonio, called North American Nickel. And ironically, the Australian connection brought to us an opportunity in Greenland. And so we were one of the first in Greenland looking for nickel. And we had a large Australian fund come in and be a major shareholder of that. In my view, made a bad decision when some ex-Falconbridge people wanted to buy 25% of the Greenland opportunity, which, again, in retrospect, was a fabulous way to get credibility for the opportunity. They were backed by Chinese money at the time, and our Australian partner wasn't interested in that. So each of them found their own way. Harvest stayed with me, as a matter of fact.
Right. Well, let's go back to that geological team, though, then that you said here. I see, looking at the presentation, I see a lot of porphyry experience on here as well, and VMS, obviously, based on what you just told me. But you're now after Archean lode gold. So how do you reconcile that? I mean, does the team that you have right now, have they worked and made money for shareholders in these type of geologies before, or is it strictly porphyry and VMS that you guys have experienced?
No, in fact, I left Warren Bates off, which is my fault. Warren has a wide and broad history in gold all over the world. And Pat has worked in gold environments all over the world. Neil has been primarily in the VMS environment. Henry has been in a gold environment as well, but not this kind of rock type and this kind of structure. And then Louis, of course, is the man we rely on because he spent his career primarily in this area. You'll find geologists, Antonio, travel the world and travel the geological structures, and they all speak the same language, as it were. And my belief is that our strongest moment is when the team's together and you share those experiences and come up. Ultimately, it's not a complex business. Ultimately, they're the ones looking at a set of variables that are not infinite. The variables are finite, and your choices are not infinite. Ultimately, you've got 4 or 5 exploration tools you can use, and then you've got the ultimate choice of where to point the drill. And that's it. What you hope and what your shareholders want is that your geologists are able to sift through the evidence and make the best decisions. And then you cross your fingers and you drill.
Well, let's talk about incentive then in that case, and we'll talk about where exactly you hope to point those drills. And Louis, I suppose that's also where you're going to come in later on. But talk to me about incentives, insider ownership. How much is it now after this new financing, and how much of that is you personally or the rest of your team, Rick?
Well, I think you'll find in our board, I think I have about 2 million shares at this point as I record it. I can't recall it. I think I've invested in every private placement in the company's history till the last couple. And our board is not a series of wealthy guys. Most of these guys, Len and Pat, are still engaged in the market. Ed's retired. Chris has got a few companies he works on as a CFO. So we're not the kind of board that is responsible for the investments. And as dilutions occurred over the last year, you'll find our percentage of the company has gone down from about 11% to, you mentioned, 2. I wasn't even aware of what it is at this point. We actually finally set these guys some options just last week. The first time we've done that in almost 3 years. So they are staying. Louis is paid on a consulting fee. Len Brownlee gets a small consulting fee when he helps me on website activities. Pat works for options and $1,000 a quarter. Henry is now volunteering with options. Neil is volunteering with options. And Warren will charge us consulting fees, but they're very low because he is secondary to Louis's work. So each of them are working on incentives. They've just been awarded some options in the last couple of weeks, recognizing their work to get us here. And those are the incentives now for them to push forward.
Hmm. How did you get your shares? You said you've participated in some of those financings before that, up to the last couple of ones. Um, does that involve any founder shares or anything else like that, or
No,
how did you get your shares?
no, I bought them in private placements,
Okay.
bought them in the market over the years. I mean, this has been going since this company has existed since 2005. I've been with the company since then. I think over that time, we've had two rollbacks. And so, as you know, we started out as a gold company. We still have a small opportunity with an old deposit in Nevada called Rosebud. In fact, I was called about it last week. If Rosebud goes to a mine financing, Harvest Gold gets $1 million Canadian. That was our final kiss from the work we did in Nevada. So it's had a couple of iterations. We went to Suriname, which in the end of the day didn't work out as well as I hoped it would. That happens. We then came out of that into British Columbia. Same opportunity. We rolled back after Suriname. Some issues with the group in New Brunswick, Canada, or pardon me, Nova Scotia, Canada, that brought it to us. But we felt at that point the best opportunity going forward was to consolidate the stock. We then spent 2.5 years in British Columbia, largely because we liked the people and the opportunity. Warren Bates, who I mentioned, he thought we were looking at a Blackwater analog in British Columbia. I think we did tremendous work, and that's where we met Crescat Capital. And Quinton Henna, their lead technical guy, met our guys, sat down, worked with us. It was quite exciting for all of us. We had him sitting in our geo meeting, taking over the screen, telling us what he thought, advising us on drilling. It was great. I mean, this is our biggest shareholder engaged, and they're engaged with us now. So each step along the way, you add to the team, and if you're doing it correctly, I think, Antonio, they stay with you. So all of those guys have stayed with us through those various iterations. And then we've added Louis in the last, I would say, year and a half, Louis.
Oh, at least that, yeah.
Almost 2 years. And so Louis ends up being the lead guy, and he spends more time on this project than anyone but me at this point, and leads our geological team. Fortunately, again, he's got a relationship already with Pat Donnelly, and now he's spent enough time with our guys. He and Warren spend the most time together on this because of their gold background, as they're parsing through things.
Where does that leave you throughout the different iterations of this company? Where does that leave your average cost of the shares that you own right now? How much have you paid for them?
Oh my God, on rollbacks, I don't know, lots of money. No idea.
You think it's higher than what the price is right now?
Oh, everybody's higher than the price it is right now. You just mentioned the last option set was at 20 cents.
Yeah. Yeah.
So that's where we were setting options when the stock was trading up to 25 to 28 cents. And when we were working in British Columbia. So yeah, nobody's in the money at this point, that's for sure.
Well, but why not lower your average cost? And in that case, I mean, I don't see any recent open market purchases from you. But given the price of the stock today, do you plan to be on the bid in 2025?
That's a good question. I learned a long time ago, if I'm the bid, I'm not really doing the job. It's a very dangerous game for the guy running the market to be the bid. It's something that it's just not part of the job description to stay sane and to stay healthy. It's also a mug's game. So we've hired a market making firm who do an excellent job. That means I'm not worried about the bid at the open. I've gone through this for a long time, Antonio. You can't be the bid. You can't.
No, but I mean, do you plan on increasing your position in the company essentially, and still providing, like in times of these where maybe there's not too many buyers out there, the market might be depressed. Couldn't you be one of those buyers?
I could be. I think at this point in my life, with my daughter in university in London, I've got priorities for my own money that I have to take care of the family before I take care of Harvest shareholders. I think Harvest shareholders are being cared for very nicely by this management group. I also expect the market making company, and they're smart. We have had nice volume in the last 8 to 10 weeks. What they'll do is they'll sell into volume, build themselves the opportunity to buy stock and maintain a market. And so that's much more effective than me being the bid. You don't want to hear from companies, Antonio, where the CEO is the bid, where the management team is the bid. It doesn't work.
You also don't want to hear from companies where anyone in management is the ask either. But I did notice a red line in the company SEDI filings from one of your directors, Len Brownlee,
That's correct.
who sold about $15,000 worth of stock at 6 cents in April. What's going on there?
Well, it's interesting because one of the guys that has joined us from Europe texted me about that. So I called Len and he said, well, interestingly, kind of chuckled and he was a bit embarrassed. I said, the guy went back to him and said, Len, you got your biggest position is Harvest. Should we lighten up here? So this is a new broker. And Len said, oh, okay. And we've been trading healthy volume. I think Len said, all right, okay, sell 50. And the guy sold 200. And so, boom, he ended up being embarrassed. I spoke to my directors and said, look, this just happened. Give you a heads up here. In this day and age of social media, you're going to find that if insiders are selling, it's going to be known, and we need to keep our heads up here. I did say at one point, I said, look, this happens now and then. Any one of us may decide we're going to sell into volume. That's what volume creates. At this point, while we're growing the story, I don't think it helps us. And so I told Len that. He agreed, and we've discussed that. And I said, look, if anybody's got a reason to sell, you call me, let me know. Let's make sure our market makers know. Make sure it's done in the sense that the market can handle it. And then I'll back you. If there's a reason you need to sell stock, you can sell stock. So I think the idea that directors always must be buying or never can sell, again, is especially when you've got varying circumstances. Everybody has their own life to live. And you must be careful that if you're ever a seller, you're doing it into volume that can manage that selling. So I wouldn't scar a Len in any way, shape, or form, other than because we haven't had this situation in this group. My director's talking to me first so that I can be the one responding to the question for them.
I actually obviously prefer it when management's buying. You don't want to. I mean, you don't necessarily want to see that happening in the opposite
Definitely.
side.
I
But
agree.
what is that is because I want management incentives to be the stock, and I want you to be working as well. Alongside shareholders. Is there anything else in there? Any other incentives? I mean, do you or any of your colleagues personally own a royalty on any of these projects?
No. No.
No private companies or anything else that are currently delivering services to Harvest or anything like that?
Well, my company does.
Well, no, I mean, and I don't mean management services. I mean more like drillers, helicopters, camp
No.
providers, or anything like that. Yeah.
No.
Okay.
No.
Um,
I think this is a bit of a passion play for all of us. I mean,
hmm.
if we were to look at each other and say, "What the hell are we doing?" It'd be pretty easy to walk away and say, but there's a certain level of ownership here relative to the time we've spent on it. We've got our own corporate, personal geological pride. We're pretty excited about the opportunity. We think we've really we're very excited about this last press release and what finally we're able to find something new about a property that's been sitting in the middle of this belt for decades. So there's all of that. And I like the group. I think we're operating in a very efficient way. You mentioned the operating costs. It's an interesting operating versus exploration. When you're not exploring and when you're surviving, you're going to find the only costs you have are operating costs. And then the goal in this game is to get large enough financing, Antonio, where you can spend the money, the next one being the drill financing. And that alters your ratio. But what you'll find in Harvest, because we don't have an office, we we really, my fee is very reasonable to this company. We do not have high carrying costs, and I think some of my shareholders, particularly guys that know the game, say, "I don't know how you guys do it."
Hmm.
So we take pride in the fact that we have a low overhead. We want to make sure that as much money goes into the ground or preparing for the ground as it can, and that's the challenge. And then we get the win. Everybody gets the win.
How do you determine that? I mean, you said you don't make your fee to the company is reasonable. How is executive compensation structured and determined? I mean, are your KPIs tied to discovery or share price performance? How do you determine that?
No. Again, let's so so we're in a situation. So just so your viewers understand this, shell companies, if you will, are sitting around today. I got a call the other day, as I mentioned, about Rosebud in Nevada, looking for assets. So we spent, since we left the British Columbia opportunity, which was brilliantly done. The work that that group did was fantastic. Unfortunately, we didn't find gold when we drilled near surface. We think we clipped a porphyry. Again, Quentin driving us to drill a little bit deeper. We think we clipped a porphyry at 800 meters. Well, Antonio, you can't be a small company, raise money, and start looking at 800 or 900 meters. It just doesn't happen. And so what we did was stay in the wilderness with almost no expenses, looking for a project. Took us almost 2 years. We turned projects down. Then the patience is required. We didn't always give people their fees. We kept it very low key, but everybody kept working. And finally, we came upon this opportunity that took us into Quebec. Thank goodness we didn't go into lithium. We sat with lithium promoters, literally promoters, and you saw, if you were involved in the lithium run, it had about a good year where if you got in at the right time as a junior lithium deal, your stock went up 10 times just because you announced you signed a lithium property. And then once you found out how difficult it was to find lithium, you'll look at all of those junior stocks right now, and I venture to say almost none of them have been a success. So we've decided we were looking for gold. The gold price was rising. It was tough. I mean, you're waiting and you're waiting and you're waiting. And then as you look, as you mentioned, your ratio, what kind of money can you raise for these early steps? Well, we got flying money. Then we finally got some ground money, but not as much as we wanted. People will see we were able to do the groundwork that we would like to do across all of our properties. Finally got it at the end of last summer to do the central area of Maso. So the work that we were doing in between was preparing to raise more money. It's the maddening thing about these small companies. So we're looking at a raise in the near future to fund drilling, and we think we have a rationale that's going to interest. And so far, we've interested very good investors, very smart guys who see what we have is based on geological reality, and that's important. It's not a stock promotion kind of deal. And so we're getting closer. And this news release last week, which we'll talk about, I'm sure, is what we've been waiting for a bloody year if we can get money into the company to actually do the groundwork. And that's the tough, keeping your feet paddling under the water to kind of show some calmness above the water. That's the tough part about running these little companies. And so we're not to the point yet where you're big enough or strong enough to start defining, let's say, reward programs or packages. Plain and simple, you issue some options. So that takes a week of the compensation committee and then the whole board agreeing on a fair share of options being spread around, which in our case, we do exactly that. We spread them around, and then you're done with it, and let's get going. And that's it. That's the entire time we spent on finding out how we're going to reward each other. Own your stock, invest if you can, give you some options, and then let's get going. So in many ways, it's a labor of love for these guys, which I very much appreciate, I must tell you.
How much money did you raise since you got this new focus here on gold in the Abitibi, and how much money have you spent on the project?
Louis, how much money have we spent in the project, including your time?
Good question. I haven't got that offhand here, but
Well, ballpark. We flew. What do we pay for our flying?
yeah. Well, flying, we ended up getting it dirt cheap kind of thing. It was like $40 a line kilometer kind of thing. That might have been 70, $80,000 worth just for the Moso, and maybe another couple of thousand for the urban berry.
Hmm.
We did a prospecting program too. That might have been another 30,000 there. Soil geochemistry program, another 40,000 or so.
So to iOS, I think we've paid more than that to iOS and to who flew for us?
Novatem flew for the
Novatem.
airplane.
Yeah, I think you'll find the bills for those were bigger than
Yeah.
that. And then Louis' time, of course, drives all of this. And um, so I guess what I'm saying, Antonio, we're spending everything we can to advance the properties. We'll get the full numbers for you. I'll tell you what they are. Perhaps Louis can dig through that a little bit. But the Air Mag program, we didn't get to LaBelle, for example. So that's, again, we're cutting corners. The geochem prospecting program, we only did the central area of one of our properties. We're cutting corners. That's because that's all the money the market would give us at that time. And so now we're trying to lever what we think is the best news we've had with these geochemistry results on top of everything else we know about. So to raise drilling money and put in a perfect world here, we're going to put about 1.3 million into the ground in the next 6 months. And now we're starting to change that ratio dramatically, but you also change the opportunity for increasing in value. For those who would look at us at 5 cents 6 months ago and look at us at 5 cents today, there's no comparison in who we are today. What we've established today with drill targets in Maso makes us a real threat. So that allows me to talk to different investors, Antonio. I've talked to the Quebec funds along the way, and each time the two main funds that support exploration, they're very experienced, very smart guys. They want to invest in us. But as you're saying, we can't raise enough money to give them a 12-month free runway on G&A, which means we need to show them we've got $360,000 ahead of us that we can comfortably assure them that we'll be around a year from now, because each raise has been smaller.
We'll
So with
definitely
this
talk
next
about,
raise, we want to put ourselves into a different level, if you like.
and we'll definitely talk about that. How, when you plan on doing that, and when that money is going to go from, where the money is going to come from. But you're bringing up an interesting point here, which might be a good point in the conversation to talk about the assets here. Starting off with your flagship, of course, Musk. So,
Sure.
what's the history here of the asset? I mean, I know Vior worked on it. What work has been completed on it historically? Where did it come from? What do you know about it?
Well, what Vior did with it, interestingly, and I think it's a good play, they decided that this area needed to be amalgamated. So they took 5 years. That's another way to spend a hell of a lot of time and on the surface not show your shareholders you're accomplishing a lot, but it wasn't their main property, Antonio. So as I was told by one of the Quebec fund managers who works in the north, looks at northern companies, he said, I'll tell you, Rick, these are the biggest properties I've seen. We just don't see size like this because they're owned, and Louis can provide some background. They're owned by families or prospectors. They've been owned for a long time. So particularly in the northern part of Maso, if you dig deep enough down, you'll see there are small property packages inside the northern part of Maso. So Vior took 5 years to create that one package to find a junior like us to come and take a look at it. We wouldn't have come if it was just smaller blocks of that. So that's what Vior did with it. I think they drilled 4 holes, Louis. That was it.
Yeah, it's nowhere close to that.
Yeah, so they really weren't looking at making this an exploration play, Antonio. They did the if you like, administrative work to put together a land package for sale, and then they put it up for sale.
Yeah.
So that's the history there. In the north, Louis, maybe perhaps you can speak to the history of the property in the north, because it's had considerable drilling by many different companies in many different years. Almost none of it was put together in any sort of substantial, organized, year after year way. Louis, but you can speak to that better than I
And
can.
Yeah.
Louis, just before you start, so that you can kind of know where or what direction to take this toward is what I'm wondering here is why would you be able to pick up ground in the Abitibi Greenstone Belt in 2020, late 2023, so almost 2024? Like it's been looked over many times. If it's good enough, why would someone drop it? That's what I'm thinking.
Right. Well, it all goes progressively as you go north. I mean, from the early 1900s, exploration along the Cadillac break, was the prime territory. So everyone was focused on that. 1920s, people went further north. There was the Destor Porcupine break, kind of thing. And as you move yourself up, kind of thing, 50s was very strong in the Chibougamau area. So again, it's just a question of what was less explored. And I think the timing was right for where we are, which is essentially the urban berry belt. That started getting a little bit more traction probably about 20 years ago, kind of thing, with the windfall discovery and that started getting a little bit more. So there's always a lot of prospectors that came in there, staked the ground, and that's it. Vior came in with the central part, the central part, their main part of their property, and they were able to consolidate a bunch of small prospector groups, a couple of small juniors. They made a deal with the more northern part with SOQUEM. So SOQUEM, sort of the government institution, they had a large block. They were working it nice and detailed kind of thing. That was most of the work kind of thing. But at the same time, Vior was also extending their claims a little bit further to the south. So they were building something that was getting interesting in size. But by the time they had all this, they consolidated, they were doing the compilation, their focus had changed to other places. They have stuff, further over on the urban buried on the windfall. They were very focused now on the Belterre area. So this was one of their first projects, kind of thing, but it was always neglected. It was never, the prime one for them. But it was also in prime real estate country. And yeah, it is very hard to get a project this size, between 18 to now I think 22 kilometers in strike length for the urban berry area.
Hmm. So, what did you get to see their internal interpretation or to better understand why they drilled what they drilled, what they thought of the results and their analysis and everything?
Yeah, and again, I was on the property with the Vior geologists. They showed me their ideas. I think it was very informal, and they were very open for the data, kind of thing. They showed us, the drill core, the rocks, the different showings. And again, a lot of geologists work in the same ideas. You have a showing, and the Vior actually did have a historical mineral resource estimate on it. We don't talk too much about it because, again, it falls in that historical. QP has not done substantial work to reassess these as being 43-101 resource estimates, kind of thing. But there was a resource, and they've always sort of worked around that area, just slowly working their way outwards.
Okay.
But when Harvest came in, we had a different approaches. Yes, we have lots of showings up in that area. And I mean, I could tell you there's like 49 showings in the northern part. Our idea is, wow, there's a lot of smoke in this area. There's got to be something hiding. But the same idea is we just didn't want to continue working the same showings. So we've been progressively working, okay, we'll compile what's known in the north. We'll focus, in the central part where there's a lot less information. And we still have a lot of irons in the fire kind of thing. Stuff to the south, the new claims that have been staked, the LaBelle one that's long strike that has had essentially zero exploration done on it. And there are places in the Abitibi where there is no exploration done.
I definitely want to get to those targets that you're mentioning here, as well as the specific drill plan here for hopefully for 2025. Just before we do that, though, Rick, what's the specific business strategy here for you in that case? I mean, is it make a discovery, find a partner for it? How do you see the future of this company? What's your goal for it?
Well, I think in any of these, and it was interesting. A couple of years ago, our lawyer advised us not to use what's known as the Lassonde curve chart, and I've had the Lassonde curve chart in our presentations in every company I've ever worked in the exploration space. And basically, the first large spike in the stock price is on discovery. So if I use VMS Ventures as an example, we went to Toronto, raised $500,000 at 6 cents with a map. I said to my two guys, just give me tell us what give me a map. So our story, Antonio, because it's very much like this story, which attracted Crescat Capital. The story was there's a highway from Flin Flon to Snow Lake. Flin Flon is where VMS headquarters are. Above the highway, there was no till. That means no soil. And there were all kinds of discoveries. Just below the highway, the till began. And as it went further south, the soil was deeper over the rocks. And there were very few discoveries. So both the guys I was working with were Manitobans. One had worked at the University of Manitoba. And our premise was there's got to be just as many deposits. They're just hidden by the till. So we flew it with what was called VTEM at the time. We've got all sorts of contacts saying, whoa, something's going on down there. And one of them we drilled fairly early and hit extremely high grade copper, 10 meters of 10% copper. And that 6 cent investment went to about 70 cents as the announcement on grade came out. And then it went to $1.70, and we raised $20 million at $1.50. That was the best share appreciation shareholders would ever see in that deal, Antonio. There are mines in the VMS belt in Manitoba where you have lenses and lenses and lenses. So you have the Reed mine, and you discover the next one and the next one and the next one. And they were actually able to build a city around it in Flin Flon, their largest mine. Turned out Reed was a small one. So the investors at 6 cents saw the stock run to $1.70. That's the curve I'm talking about. So to the investors that are watching this show, you need to understand why you're investing in a junior deal. At this point, the best opportunity for shareholders here is to see the opportunity for discovery. Now, sometimes discovery doesn't happen on the first hole. And most times, I think safe to say, Louis, it doesn't happen on the first or second or third hole. You need more holes. But what you're watching for is, are the sophisticated investors staying with you? So our map, so the same story, Antonio. If you look at the map of Harvest Gold, and Louis has mentioned strike length, along the Urban Berry Belt, the Urban Berry property, that's the main structure of the Urban Berry Belt, where down to the east, Windfall sits. How many ounces in Windfall, Louis?
Oh, sorry, they're in the million ounces there.
Millions.
5 there, but yeah. So
yeah, it's a lot. It's a big mine. So we're on the same structure. Now, if you look down the way and then arc to the southeast, you'll see a splay, a different structure that runs through Massault. We've named it the Kiosk River Mineralized Corridor, and it's the same structure that we hope and we think is significant for holding big deposits. It continues down into LaBelle. So that was the map. Structures right down the middle of each of these properties. Crescat Capital owns 75 juniors now. They downsized. A fund out of Colorado, very successful in this space. Their lead geologist, Quentin Henne, I mentioned, he met us when we were working in British Columbia. He liked the way we worked. When he saw this opportunity, and this is only a year ago, we met with their management team, just showing them this opportunity. So it's kind of almost the same map, Antonio. The VMS map was, here's the road, here's till cover, no till cover, we're going to look for deposits down here. This one is, here's the structures that go through every one of these properties. We're going to look for deposits along these structures. And that's why we're so excited about this central area information. We knew what was up north. We're going to drill up there. We think there's gold there. Obviously, it's a gold environment. There's lots of showings. People just haven't drilled deep enough to find it yet. It's there. The unknown is what's the mystery in this, and that's what's along the structure and the cross-cutting structures in the central area of Massault. That Kiosk River Fault, that major structure where gold gets trapped and is hiding and waiting for us. So what will happen here, we're successful raising money, we drill the project, we look at our central area results. It's tough. You're gonna pick a spot based on what you know on the surface, and you're going to do your best guess. to see if you can find gold below the ground. Now, if we get lucky and we get grade and we get some significant length, then we'll be known around the world. And that's what happened with VMS. Immediately around the world, anybody looking at VMS deposits knew about us. That's what every junior wants. That's what every explorer wants. What we're trying to do now is bring in as many sophisticated investors who understand the big potential here with all of these structures. Crescat's critical to this. The investors in this small raise we did, we called it a bridge financing, are very sophisticated players. They're not looking for a double. They're going to position themselves with a good, healthy position to start and build the company with us. The two Quebec funds I mentioned, they're interested in investing in us. We just need to be a little bit bigger. My intention now is to go into the Montreal retail space with this story. I think the press release last week now identifies us as a real threat to discovery. The opportunities we now have in the central area went from potentially 2 drill holes to what we know to potentially 8 or 9 drill holes. And each of those holes, of course, could have other holes surrounding them, Antonio. So what we've created in the space of a year here is we've taken the diagram, the simple story, and now we've put some real meat to it. Now we've got a focus in an area where we want to be. We want to be on these structures. And this is one of 3 properties the companies own. So I think it's just an exciting story. What I'm looking for every day is people that understand the geology part of it. The earlier questions you asked me, it's the same response I would have about the lawyer and about the accountant. Get your handle on the share position, get your handle on operating costs, get some faith that we are in this for the right reason, and then forget about that. You're now cheering for us to raise enough money to drill enough holes to win. So you join the Crescat guys who are in it for the long run. They'll hold harvest for 6 years, 8 years. They may hold it till we're a mine. By that time, most of the investors that are talking to us now, and I don't mean this in any way negatively, they're gone. And our experience in any long-term players in this game, their experience is they didn't sell soon enough. You didn't sell soon enough because you kept hoping. Well, it takes a long time to become a mine. But there's steps in valuation along the way you can make a lot of money on. So that's where we are today. We have this map and we've suddenly colored in a lot of an area. And one of the many miles, kilometers of strike length we've had, we're coloring in a little area in the central area, and it looks great. And that's where we are today.
Lots to touch upon there, and I'm hoping we can get to most or all of it. How does your partnership with Vior tie into that whole situation, though? Because it's still not 100% clear to me, but you've recently staked more ground that's going to be part of the same project, which, again, as I mentioned in the overview, if you don't complete the payments and the work on it and everything, it goes to an 80-20 JV. But this new ground is the fruit of your own labor, essentially, not Vior's. So, again, a bit of a complicated way to get to a question on my end, I suppose, but help me better understand this whole situation here. How does it work?
Well, when Mark Fedowich, who's now the chairman of Vior, by the way, for your viewers, interesting to know, Cisco Mining sold Windfall to Goldfields. So now instead of being surrounded by Cisco Mining, we're surrounded by Goldfields. The Cisco Mining management, who had worked in this belt now for most of their lives, Louis? You know some of these guys. They, in a very friendly way, have come in to run Vior. So I'm talking to their VPX this afternoon, when I talk to these guys, I'm talking to the guys who are part of Cisco Mining. Cisco is in a conglomerate of 6 or 7 or 8 companies who have raised billions of dollars in Quebec for a variety of different projects. So our partner, Vior / Cisco Mining, are established, credible, real players in Quebec. That's phenomenal. They've been cooperative. To your point about how did these new claims come, that was Vior's work. Hey, Louis?
Yeah.
You know, they're out there making geological decisions based on their Cisco Mining eyes and experiences and saying, you know, we're going to tag to both ends of Vior here because it's within a kilometer or thereabouts, it's within the area of influence. It's a very good signal to our investors, Antonio, that we didn't have an argument about that. They asked us if we wanted them. They did the work, which is great. We just paid $3,500 or something for the claim costs. But they did the work and were well aware it was within the area of interest and treated us as they should, as good partners. And so now we've got additional land along that Kiosk River mineralized corridor I mentioned. So that, I think, from the market's point of view, expresses what kind of relationship we have with these guys. We also have yet to include them in our geological meetings. That's coming, as we did with Quinton, and I will be including Quinton again in the next couple of weeks here as we look at finalizing drill targets. I want his input, and that's, again, part of my philosophy, that the guys who know the most, bring them in. And then you got to fight. Everybody has their own priorities and their own thoughts, and ultimately, we'll make the decision. The harvest players will make the decision where the drill is pointed, but those are the meetings that are the most exciting. So that Vior is very much a part of what we're doing. The deal was struck between Fedowich and I. Basically, it's a back and forth. The little guy has to pay some cash. They spent a lot of money to put this together. They spent some money on exploration. They want a piece of the little guy. They're going to get a good piece of it. They're going to get 12 million shares. They know that will be diluted as we go along, but they're happy with that. They have their 1% NSR. We get to an 80-20, Antonio, and the good thing for harvest shareholders, in the next 3 years, if we're starting to show that we have the evidence of a deposit forming, we need to pay them $1.5 million to get the last 20%. And I believe, in the way that we structured this, was they're going to have a big chunk of stock. They're going to be winning $1.5 million the market will pay for to get us that 20%. So I think it's structured in a fair way. It's heavy in this tough junior market that we're facing. It's still heavy, but we hope that with the reception we've gotten recently, and now with this new news out, that the next raise is going to make that easier again. And then results and the opportunity to do more work on the ground around the central area of Vior will gain some momentum. And at the same time, as I mentioned, we're gaining shareholders who have this incredible experience, understand the time it takes to be successful in exploration. And that's significant. You need these guys with the long-term view. And ultimately, they're doing this in lots of companies. So they look at us, they make a decision. Quinton moves on. They're invested in 75 companies. I know for a fact they're looking for projects right now around the world. So he comes back to us and checks in and spends an hour with us and confirms up the line in their fund that we're doing things the right way. But that's what you need. You need smart, experienced, long-term players. And I hope that we'll be going into Montreal on this next financing and meeting some of the people that work with more advanced Quebec companies, because we're trying to put our stake in the ground that we're ready to be considered that.
When I ask about the relationship, really what I'm looking for here, Rick, is I'm wondering, how do you see yourself next to Vior? I mean, do you want to, or well, is your goal to become kind of an exploration extension of Vior and therefore their partner, or do you see yourself just being a completely independent company?
Yeah, what they want us to do, Antonio, in a perfect world, is to become independent of them. They'll have earned, it's called an earn-in, so we earn in. So by the end of it, they'll have got their cash. They'll have seen money spent on the property by a junior, which was their intention to begin with. And they've got a large share position in this company that they did the deal with. So rather than they've made a decision corporately. As Louis pointed out, they have a very large project called Belterre. They're also looking for more. So their view is out and big. They raised $40 million upon joining the team. And that's because that's who they are. This is the Cisco Mining Group. They just sold Windfall. So they can kind of raise money at a whim. So what they want us to do is pay them, get through the agreement, be successful, and then go make a discovery, and they'll leave Maso behind and get on with things and leave Maso to us. Then the other question you asked, who becomes our takeout partner? Well, obviously it's going to be Goldfields, and that's good too.
Well, how do you, when you say obviously, how is that obvious in terms, like, where's that coming from? Because you say you haven't spoken to them yet. So how do you know that's
Well,
going to
we
be the case?
we met with their geo team in December. They've all been in the property for 10 years. They're mostly Osisko mining guys. So Goldfields was just getting their South African based company. Their new Canadian management was just coming in. But we met with their geo team, 5 guys, I think, Louis.
Yeah, about that.
Yeah. And they were all Osisko mining guys, right?
Hmm.
Yeah. So they've just been hired by Goldfields to continue their work in the belt, Antonio. They've all been in the belt for 10 years. The reason I say it, I don't mean to be flippant about this, but other partners are not likely to come. Maybe Louis knows another um, company that could be possibly in play with Goldfields down the road. Is that likely, Louis? If we're
I don't know if they already own 80-90% of the belt kind of thing. It's, we're next on the list, I'm sure, but
yeah, I think it's good and bad. It's good in the sense that you much like we had the situation with Hudbay Minerals when we made our discovery in Manitoba. They're 90 miles away or 90 clicks away on the road, like right on the road. The discovery we made was literally next to the road driving to Flin Flon. Nobody can compete with that. Now, if you keep building the resource out and you're fortunate enough the resource is big enough, and 10 years down the road, you feel you've got something that might be attractive to somebody other than Goldfields. The question then is, Antonio, to your point, when do you cut the deal? Well, typically for juniors, much like with Vior, they make this deal. They want to get us independent as fast as possible. That means it's good. I think the situation for Harvest shareholders is if you can make a discovery and make it a deal for Goldfields and they buy us, thank you very much. The exit point is established. It's a takeover. And that's the ideal scenario. And that takes a while, obviously. So all that's possible. And in the meantime, early shareholders have to have confidence that we know what we're doing and then cross their fingers that we're going to make a drill discovery. That's kind of, and so what you're trying to do, sorry, last point, along the way, what I like about your audience for the most part, as I understand it, Antonio, they're retail investors. So I can speak to retail investors. That's who I've been talking to while I've been rambling away here. I'm talking to retail investors about what I know about them. What we're also trying to do is get more institutional investors. Why? Because Crescat keeps putting 20% of the financing in.
I have a point on Crescat as well, actually, to ask you about here in a minute. But
yeah, please.
To your point of who takes you out, does not feel like it's also limiting your options here? I mean, it's essentially Goldfields is potentially the only party taking you out here. That's what you're saying. And does that not limit the options and does not give them the upper hand in any potential negotiations?
Absolutely. But at this point, you're asking me a question. The obvious answer is Goldfields. Now, if we get hot and we start, say, in the next 2 years, we've got pockets of gold showing up in our properties all over the place. The stronger we get, the better leverage we have. When we made this discovery in Manitoba, Greece hit in 2008, and suddenly the stock went down, which was hard to believe. We drilled 100 meters of 4% copper. The stock literally popped back up from 60 cents to $1. Remember, in November, it was at $1.70, and we raised money at $1.50. But the Greek debt problem freaked the market out. So I phoned John, and I said, John, we got 3 drills going. If that isn't impacting our market price, then let's just stop drilling. We're not going to be at a stronger point to negotiate with Hudbay. So one hopes that you're going to be in a position where you can have choices, and I'm not suggesting that we wouldn't in any way do that if we had choices. But the good thing is we're not in the middle of nowhere where there is no idea who might take you out. Therefore, and importantly, Antonio, therefore, you need a much bigger discovery because that discovery itself will require all the infrastructure. In this case, it's conceivable. One scenario is that you ship the product to the windfall machine. It's quite possible. Now, Neil's quite convinced we're going to find two 1 million ounce deposits on this property and build our own infrastructure. And I like that because Neil spends about 50 million a year on exploration all over Canada. And he's optimistic about this. He likes our properties. And so there you go. There's two scenarios for you. Either one, shareholders that invest today, Antonio, if we get to that position, they're happy. They're extremely happy. And by that time, they've made such a return on their investment. They've probably moved on and they're quite happy to take what we think is the best at that point. And who knows?
Do you think Vior is going to be coming in on some of your future financings as well? Like, do you expect them to take a chunk of the equity now?
I haven't asked them to do that. They're getting stock every day. They're getting stock every day. I think the next equity player that would be interesting is Goldfields. You know, and to your point about how do we manage Goldfields? Is it the best thing to do get Goldfields in today as a 10% investor? I don't know. I want to talk to them about it. My sense is yes. If we get Crescat at 20 and Goldfields at 10 in a perfect scenario for now, it may be too early for them. They're still figuring their way around Canada, but I think we have to talk to them about that. Again, what we're looking for is credibility. And so if you get these institutional investors joining the party, which I hope to do in this next round, we can say to your shareholders, to your retail shareholders, I'll call them your retail shareholders as an example, but any of them, look, the due diligence has been done. This isn't just Rick Mark talking away here. This is these guys, their responsibility as institutional shareholders is to, in this case, the government as shareholder. They're very experienced. They're looking at all the exploration opportunities in Quebec, and they're willing to take a shot at harvest. Well, that gives you some comfort. And right now we have Crescat, and I'm suggesting to you and your audience that is good comfort. Quentin is a believer, and he believed in the map. And they last spring, until they had some problems, they were ready to take more than 20% of the company. I mean, they're enthusiastic, and it's the map, it's the structures within the map, because the structures, Antonio, are where the big deposits hide.
Wait, talk to me more about that financing and that next round of financing, what you think that's going to look like. Well, specifically, how do you finance the company without too much dilution? Of course, is the main thing from here on out, given the market cap. And I mean, again, look for a strategic partner come on. The equity level is a JV even possible now? How do you see this next round happening?
No, the next round is going to be equity, and we're gonna put it in a situation. We'll see where the market goes in the next couple of weeks. Next week we'll be announcing detail on targeting. What we announced last week was an area, kind of a small areas play. Here's where we think our targets will be. Now we're going to combine the north targets and the south targets and tell the market exactly where we're planning on targeting. And then we're going to raise some money. And we'll see what the market would bear. I've already been in discussions with the guys that helped us in the last round, who intend to help us in the next round. And we're looking at, likely in many of these scenarios, you can do a charity flow through in Canada, which is good for our shareholders because it reduces dilutions. So we've talked to the gentleman who's our point guy on that. He's ready to go. So it'll all come to fruition over the next 2 to 3 weeks, I hope, Antonio.
That is a time frame. This might be a good point to talk about what you've been alluding to as well here, Rick. What's the Crescat connection? I mean, especially given the size of your company and the size of their position, I think that's an interesting thing to better understand. But I know you touched upon it there briefly. But who brought them in, and do you expect them to keep stepping up for future financings? Are they, yeah? What's kind of the relationship? Is it the personal relationship between you and them, and their relationship with the Harvest?
Trying to remember how I think I might have been introduced to Quentin. I mean, it would be as simple as that. I wasn't particularly familiar with Crescat at that point, and I found out quickly that you're suddenly talking to their CEO and their president, Quentin. That's how they operate. And every meeting I have, of course, I've got my geologist with me, and that's where the credibility comes. So they like the British Columbia story. Again, we built the story starting in the air and then working on the ground and then finally drilling. And they were engaged. And so it's like any other thing, Antonio. Quentin liked us and trust us. So I don't bother him very often. I told you how busy he is. I talked to my Toronto networking guy on Thursday. Say, how's Quentin doing? Because I want to just make sure I time this next contact. It'll be this week with Quentin as we're getting the story better told. I want to get a good handle on him. I'm quite confident. These are still not big amounts of money for them. So I'm quite confident they will continue their positioning in the 20% range. And particularly this one, now that it's going to be a drilling financing. So again, my plan is to bring Quentin into the drill targeting meeting.
Well, that's a good point, actually. I'm sorry for interrupting here, but that's something that I've been thinking about as well. Is it, are they going to get any decision power? Because they do seem to be a bit of a lifeline, I suppose, at first glance. I mean, they did take most, if not all, of that financing was them and related parties last time. So does that come with strings of any sort
No,
attached?
at this point, none. I've offered them a board seat. I've offered Quentin a place in the advisory committee, all that stuff. I think we're still too small, Antonio. And they know that it's a phone call away. They trust us I mean, ultimately, investors want us to spend the money properly. Your earliest set of questions related to that. It's hard to know when you just look at a financial statement exactly what that means. And for people who don't understand the game, as I said, what you want is, in your ratio, you want that overhead cost to be the same. You don't want it to grow dramatically along with the exploration expenditures. And I think your idea of a ratio is a good one. But early stage, obviously, it's going to take a bigger place than it will in the future. So ultimately, in my belief, the reason is they trust us. And once it's like what I talked about before, once you know that the lawyer is a good one, you shouldn't think about the lawyer anymore. So I don't think they worry about Harvest spending money unwisely, or Harvest wasting money, or Harvest stealing money, or any of those kind of things. They got a lot to do. They have funds they're running, many investments. We're one small investment. So as long as we're on track and Quentin's happy, the team goes with it for the most part. So yes, I expect them to stick with us.
What's you said 2 to 3 weeks, you're trying to figure out the money situation here. Essentially, what is when you expect drilling? Is drilling seasonality related up in the north, or how does that work?
We're hoping we're drilling this summer. That's the plan at this point. So we're very close to moving on this. No idea when we'll announce it, but the plan is to be drilling this summer.
How well? So if you raise capital, because this summer essentially starts in less than a week, I suppose, in June, right? So
I would say mid-July is a good starting point for us.
Okay. What would you want to see in this drill program, Louis? This might be yours, herein, as well, but what would you consider success? Is the plan, or is the need still for that $1 million to drill that 5,000 meters? Or talk to me about what exactly you want to do, and what would you consider success?
Yeah, as far as for the drilling plan, I think we'd like to split it up with the central portion, which is really underexplored, may have some large elephants hiding in there. And the second portion would be more in the northern part, where we have a lot of good high-grade showings. And a lot of these showings are open either along strike or at depth. So we want to sort of take some of those other showings and see if we can't expand them bigger at size than that. So we want to sort of split it up between 50-50 between the northern part and the central portion of it.
This again, Louis, might be more your forte, what I want to get into here, but I see the group you've been comparing yourself to. So it's essentially Windfall, Gladiator, and Barry. You kind of compare yourself multiple times throughout the presentation to them. But what's this comparison based on geologically? Is it lithology, structural controls, alteration, something else entirely? What do you
Sort
see?
of a bit of both, I guess. So I've worked on the Cadillac Larder Lake, Dester Porcupine, and what you're looking for there are large, major crustal breaks that essentially go east-west. So for us, the equivalent of the urban or the Cadillac Larder or Dester Porcupine are those east-west structures, the urban berry deformation zone. But where all the gold deposits are usually on the splays off of that. So if you look at the Windfall, it's going to be a splay coming off towards the south and towards the southeast. We have essentially the mirror image of that for the Moso property. We got sort of an east-west belt, and we're a splay that's coming down towards the southeast at this time, kind of thing. So coming in from the opposite side. So it makes a mirror image. So what you want to be is close to those major breaks, but on the secondary splay structures. And again, what we have geologically, I mean, we've got the same thing. We've got intrusions in there. We've got volcanics. We're on the edge of a large intrusion, or the Wilson Pluton kind of thing. And that helps being, at the contact of those different rock types, hard rock versus a soft rock. It helps with deformation zones. And even just walking on the property, you'll see some of the pictures in some of our presentations, these iron carbonate deformation zones. Very visual kind of thing. So you've got the fluids going through that's bringing the carbonate. You've got veining. You've got sulfides. You've got all the ingredients really for a good deposit.
What is maybe you can talk to me about the plumbing system here a little bit more in depth, because you call this district scale fluid plumbing system essentially, but how do you, I suppose you don't know, but why do you? I was going to ask, how do you know? But I suppose you don't.
Yeah, well, no, I mean, you just have to look at sort of any of these maps, and you see these east-west greenstone belts. And when they map out these east-west greenstone belts, in the government scale, things like that, they always note deformation kind of thing. So they know there is a major deformation corridor going through there. But when you want the gold deposits, you're looking for, like, say, either secondary structures, you're looking for structural features that's going to concentrate the fluids into a certain spot. And that's what we have here, is more of, a secondary splay, intrusions that's going to help us focus the gold mineralization.
This would have been a bit of a follow-up here for me as well, because the Abitibi is known for those kind of irregular, discontinuous, high-grade shoots at times,
right,
and significant nugget effects in sampling as well. So how do you deal with that whole situation? I don't even know how to ask that question, but that situation is there often. So what do you do?
Yeah, well, we have to essentially zoom in. So, the first thing I'd say is we're looking for those major east-west structural or crustal breaks. We're looking for the splays as a second order. The third order is what you're just mentioning there, those high-grade shoots. And that's where the exploration came in. That's why we did the airborne geophysics. We did the prospecting. We did the soil geochem. And those soil geochems are going to sort of say, hey, you've got gold in this area. Again, it's still a broad scale. It's more than a deposit size. So that's where we have to sort of go in and do the drilling. If we get some gold mineralization, then we have to start getting even more detail and saying, okay, what is the plunge of this mineralization? What is the strike extent? Is there more than one lens, up and down the stratigraphy and that?
Right. So do you have the vertical sections from historic drilling or something else that you can look at to help you better analyze
so
it?
all the northern part there with the drill holes, we brought that into the 3D model, brought it up to, today's standards for looking at geology information that. So that's where we've made these longitudinals, cross sections. We've got plunge directions interpreted. So the northern part's all right, and that's what the focus for the northern part drilling is. The central part is, you've got one drill hole, so you really can't do much of a cross section or a longitudinal with that. So that's going to be more, I'll call it grassroots exploration. We know there's gold in the area. I just don't know yet the dip of the horizon. I don't know the plunge of it. So we're going to do a bit more exploration down there, see if we can't zero in on one of those plunging bodies and then, drill it off.
Antonio, just a point about the north. If one were to read the 43-101 over a 10-year period in the 80s, Warren refers it to the flow-through period. I guess Louis would know about that, but the government sounds like it was just pushing money out the door for flow through for expenditures to keep the exploration business happening. So in the northern section, there were small pockets of land held by different people. No one has done what Louis just talked about. No one has taken the information that we now have been able to put together as one from these very small packages of land that Vior put into the northern part of Mousseau, and do the work that Louis just referred to on that disparate information. It's now a whole database. And so we think we have a better chance than the kinds of drilling progressions that happened over those years. Just didn't have the kind of holistic view of the property that we have. So we think we're going to be, if you like, a little more intelligent on the drill selections in the north, and are very confident. Confidence is the wrong word. We're hopeful that with that kind of understanding of the whole and the showings that are there, unarguably, we have a chance to take advantage of that and produce better and more showings. And we, as I said, we know there's gold there, and we just need to keep providing evidence to the market that there's more gold there. And then ultimately, these things are always deeper.
Yeah, we just don't want to go in there and do blanket coverage. If we had unlimited funds like some of the majors, that would be not a problem kind of thing. But at this point here, we're thinking every drill hole has to be, confirmed multiple ways. Yes, it's worth, drilling it. And that's why we did the geochem, the geophysics, the prospecting. So when you have every one of those showing one specific target area, it's definitely worth a hole.
Well, you said there's gold there. Now you have to see if there's enough gold there for it to be economic, but you also have to know where it came from and how it got there. So you need source, structural controls. And you mentioned through-going structure here, but what do the supposed chutes here look like for you in terms of plunge dip orientation? What's your, I suppose you don't know yet, but what's the model here?
Well, the model would be something like the windfall. I mean, the windfall isn't just one big, I'll call it potato sitting out there kind of thing. There's a series of these lenses, and the Abitibi is very well known for, I'll call it almost like pencil-shaped lenses going down. It might be like a 9-to-1 stretch ratio. So the surface expression is very thin, like a scale of 1, but the depth penetration is usually about 9 times the size. So, it's trying to find that one at surface where you have it, and then following it down plunge.
How deep do you have to drill it this year?
Oh, this year it's going to be essentially shallow drilling. I mean, all these ones here are just testing near surface showings, based on the geophysics, the geochemistry for the central portion. The northern portion, we do have some holes in there. So that's going to be probably the second step. So rather than being near surface targets, they'll be slightly deeper. And I'm talking when slightly deeper might be in the 200-meter below surface range.
What about
all our central holes are going to be probably, in the 200-meter length hole. So test, within the first 100 meters.
Given the potential nugget effect that we talked about earlier, how tightly do you drill it for the first pass program?
First pass is just going to be fairly wide kind of thing, one anomaly, one hole. But then we look at the drill core kind of thing. Do we see any shearing going on? Can I see a structure? Can I see alteration? Can I see mineralization? If I can see it and I still don't get the gold, maybe it is worth, another hole on either side. I mean, exploration is always a hit and miss. There could be one that looks nice structurally and all that. We drill and we blank on it. Well, if we blank and there's no sign saying there might be something, you just missed it, we'll move on to the next one.
What is it maybe that we should have started there maybe, you touched upon it briefly, but what is it exactly that you'll be drilling in terms of drill targets? I mean, I know it's soils on top of mag, but
on top of IP anomalies, on top of structural features. So there's a whole layer one on top of the other. We've brought everything into the GIS, Geographic Information System kind of thing. So there's all these layers, and the question is, does each layer confirm that there could be something below it?
I think, Antonio, in the last press release last week, and to your audience, there's some diagrams there, 3 or 4, that talk about this layering of different information, providing us confidence that we're beginning to zero in on targets. And the geochemistry was really literally icing on the cake on top of it, telling us that there's evidence of the gold right on top in a broader area now of the other indicators that we like to see that suggest we may be in a gold-bearing area. So that's really all you can do. I said something earlier. People think, this is an extremely complicated business, that we have many, 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 many variables and choices. It's just not true. You have some variables, a controllable amount of variables. It's a matter of how much money you spend. People go out drilling on day one in a company like this. They could go to the north and say, let's get drilling. We've got drill collars. We kind of know where we are. Why don't we do some drilling? And we just have never done that. And so we took the time to do the data compilation work that Louis did a great job on. And then we did our work flying the property and getting a sense of adding some value to it. And now we're ready to go. But we couldn't do that without the compilation because of all the time it took and from different drillers and different companies to provide that data, which was sitting unused and really useless until it was compiled. In the central area, it's us generating the story with the work we're doing, with some historic. There was some IP work done historically, hey, Louis?
Yeah.
Yeah, and that helps. That helps. So that's the time it takes to get to the point where you're drilling, I think, more intelligently, because drilling costs the most. Although I will say this as well, Antonio, this is as inexpensive an environment to work in as you're going to find. It's remarkable. And that's another thing for people to understand. You can hear all the pitches and the grades and this arm waving. If you're in the middle of nowhere and you're using a helicopter, you're not getting a hell of a lot of drilling done, especially if the season is limited. Where we are, you can drill effectively year-round. The workers stay in the town, which is not far away. You don't have to build a camp. The drilling costs end up being about $200 Canadian a meter. It's ridiculous in a good way. And that's another really important part of this story, that we are in civilization and we're just taking little trucks and ATVs into the area. We're not even building a camp. Hey, Louis?
Yeah, that's right. And you brought up the question before, why wasn't this area sort of discovered earlier in that? And it's all the question of forestry development. As the logging companies go further and further away from the communities, and in our case, Le Bel-sur-Quévillon, which was a forestry development place, as they go further, they make more access roads. Prospectors use the access roads. They make, the little showings. If they find a showing, then, the juniors or intermediate companies start coming in afterwards then. So it's just a progression kind of thing. And we're at that right time being where we are of, we have the logging development now expanded through our area. We do have something we know, and the access is easy. So exploration is a lot cheaper.
Warren made the point early on last year that he says, I don't see any samples beyond 25 meters of the road. So people drive down the road, they walk into the bush a little bit, do some sampling, do some exploring, get back in the car. So that was okay because it was all fairly virgin territory at that point. The fires have helped a little bit as well, eh, Louis?
Yeah, that's right.
So that's something that I wanted to ask as well. In terms of seasonality, you said you want to be drilling this summer. What about goose, moose, fire season? Any other seasons that might be holding you back?
Louis?
Hunting season would be about the only one. Anyone in northern Quebec takes hunting season very personal, serious kind of thing in that. So for the 2 to 3 weeks, there's moose hunting. We'd like to be out of the bush. We could still work if we wanted to, but again, just to respect the locals kind of thing, we're shutting down during hunting season. We could easily drill before. If we don't finish in time, we can essentially drill afterwards too.
So you're sticking to the idea of doing 5,000 meters at Musso? That's
right. Yeah. We could do that in 2.5 months. And again, you want to finish it before hunting season, which should be about mid-September it would start.
Okay.
Okay. So, we don't have any large major swamps. So, that's not a problem. We can drill essentially year round.
How long is it going to take you to turn around assays? Because if you're saying you want to be done by, let's say, early to mid-September,
that's right.
68 weeks after that, you're thinking assays in November-ish?
Well, assays typically at this point take about 4 weeks to turn around kind of thing. Maybe it'll pick up if, it's quiet out there, but we're anticipating 4 weeks. But again, the main thing is if we can get the first drilling phase done, before hunting season, Then we can get the assays, then we can look and see if we want to do a phase 2 immediately after in that.
Okay. How are you going to be, or how are you thinking of assaying that? Is it hole by hole, all at once, batches? How do you see
No,
that?
it'll be hole by hole in that. So as the hole finish, well, even not even as the hole finishes, as the hole is progressing kind of thing every day or second day kind of thing, it gets brought into the core shack, logged, sampled, and sent off. So it's
Hmm.
almost on a continuous basis. What comes out gets logged, gets sampled.
Hmm. And all the work is going to be at Musso in the meantime. Like you're not necessarily going, or are you going out to Urban Berry and Labelle?
No, it's just me drilling on Moso at this point. We do have plans for the Urban Berry and LaBelle coming up in 2025. But again, they're earlier projects, so it'll be more reconnaissance type of work, kind of thing. Some we want to do airborne geophysics, some we want to do till sampling, some we want to do prospecting on. And that's all the stuff you need to build up for the drilling program. And that's exactly what we did on Moso. We did the regional airborne, we did the prospecting, we did the soils. Now we have the drill targets.
Okay.
And it'll be a matter of how much money we raise. We'll do as much work this summer as we can. If we raise enough money to do additional groundwork, we will. So we'll see. We'll see what kind of appetite there is for this financing.
So is it only money that you need in order to make that happen? Is there any paperwork, permitting, ecological reserves, or anything else you have to take care of before
No,
that?
we're pretty good for that. We have in Quebec now, they have the ATI permits kind of thing for drilling. And essentially, we've gotten permission from the First Nations, the community, and all that's approved already. And then from the government.
2-year permits.
Yeah.
Okay. There's no, again, ecological reserves or anything in the
No,
in the
nothing,
middle of that? Okay.
nothing to worry about in that part there. So,
Okay. Right. What about G&A? What's that going to do to your G&A? As I mentioned, it is already low. I mean, it's below 40,000 a month on average over the last reported 9 months, as I mentioned. So, Rick, what is you ramping up more, doing more work? What is that going to do to your G&A?
Nothing at all. It just all goes to everything we can raise that goes into the ground. We're going to raise it. We have spent more money on marketing in the last 6 weeks. We're trying to get the story wider. I think that will be evidenced. We've got 3 interviews this week, including yours. Not spending a great deal of money because I hate spending money on marketing. I've learned over my many years doing this that almost none of it means anything. It's a very difficult world. It's a micro world. What I like about Antonio, what you're doing, and the guys that introduced me to you, for the most part, they're what I will easily say are sophisticated investors. And I know that, but just by the conversations I'm having. The conversations, the questions you're asking are exactly the questions that should be asked. So good for your viewers to finding someone like you that will do that for them. Most people have no idea. And in Canada, I must say, certainly Vancouver, which was the heartbeat of exploration financing forever, Denver, Calgary for oil and gas, and in Vancouver primarily, like worldwide. I think they're aging out. I think the brokers have aged out. I think the Bitcoin came along, marijuana came along. You saw lithium take a run there, and it became more the fashion of the day. And who can blame them? That's what exploration used to be before all the rules came in. Yet when you make discovery, and everyone you may hear this phrase, we need another discovery. The reason we need another discovery, let's say gold, is that everyone can see what it means immediately. When you see these big sellouts, when a company finally is bought and there's a great return, it's taken a long time to get there, and you're a long, patient shareholder. It's a great return, but you're a long, patient shareholder. You've bought your stock. You believe the story. There's 2 ways to play this, Antonio. You can buy our stock today. You can get a pretty nice position. Just put it over here and forget about it. Check in later, not be watching it every day. That's one way to play this. You can time your purchase of your stock and buy it and sell it on the. It's a very, very, very tough game. If you like the story, get a position in the stock. And that's what you do. And hopefully your investment portfolio is big enough that this is just a very small part of it. Because what you're betting on with us is that return is going to be tremendous. it used to be the 10 times. So if we get to 50 cents and people say, well, why are you looking at a 50-cent stock? You say, because I bought it at 5 cents. In order to make money on that, you got to put some money in. And that's where it just comes down to who you are as an investor, how much money you want to put in that particular day. So I think it really is a situation where people have to go to a place to find somebody like you, or for me to find an institutional investor who understands what's going on in order to make these decisions. They don't want to listen to me, and it's important they hear me. And I'm impressed with the questions you've asked and give us an opportunity to present ourselves as who we are. I think it's pretty clear that we're committed to this, and I hope, understand what we're doing. And I'm very pleased that we brought Louis along today, because I say to your investors, without Louis and the Geo team, none of this means anything. And still, it's risky. It's a high risk environment, but at this price, with the opportunity in front of us, I think it's really worth consideration. Just taking a position and crossing your fingers like we all do.
When you talk about marketing, what are you planning on doing specifically in terms of how much are you looking to spend, and then who are you spending
As
it on?
little as possible. I've committed to some small buys of $12.50 a month, for example, for 12 months, which pleases me. There's an interview I'm going to do. That's a $5,000 interview. That's a defined audience. The reason I chose this guy is he put $37,000 into the last investment without talking to me at all about his business. So good for him. He's a player in the game. He knows our network of Crescat guys. I like him. I think the price is reasonable for our shareholders to take a shot at that. I'm interested to see what you think of this, and you and I will talk about your business structure at a point, if you so choose to do. But not very much further than that. I've got one other newsletter writer I've known for 20 years. Wrote a piece on his the 1st August, a year and a half ago, just because of our relationship. Again, very inexpensive, Antonio, but broadening the audience. And it doesn't take a lot of buyers to move the stock.
Yeah. What am I forgetting to ask you here, Rick and Louis? What did you guys come here hoping to talk about that I've failed to bring up, or something else that you think is important to cover before we wrap it up?
Louis, anything on the geological world, the starting way up here and looking down, anything that we've missed here from
No,
your
I think
point of
we've
view?
covered it. I mean, like say, geology is just a question of zoom, taking the big picture, zoomed out and just zooming in as you go along in that. And what we're doing is really nothing earth-shattering kind of thing. I mean, people are talking about using AI and all that for exploration. And it's just a question of having all the data sets and having someone who's experienced, trained, like our group of geologists, being able to look at that data and saying, yes, that's favorable, that's favorable, that's favorable, kind of thing. And that's what's helping us targeting at this point. And again, we're not coming in, focusing with 14 drills, just blindly testing everything. It's like it's as if it's our own money kind of thing. I put my bet on that drill hole kind of thing.
Well, I'm sure I'm forgetting to ask you a bunch of stuff, but I'm also sure that people watching this will have something to say as well. So hopefully we can do this in a future interview. It's my last question is typically the magic wand question. If you had a magic wand, what would you change? What would you wave that wand at and make it go away? A risk, an issue, something that keeps you up at night. So I guess, Rick, we can start off with you, and then Louis, we can do the geology later.
Well, I think the biggest complaint I hear in my chair is just the challenge of raising money. In an environment where gold's at $3,300, one would expect that the exploration component of that commodity would be rocking right now, as it should be. I mean, this is a situation where, and we haven't, the big companies are making money now, the mid-sized companies are making money. You start to see the money flowing down. But again, I think the nature of the brokerage has changed, the nature of the investment community has changed. And so you need to take different roads to get to the money, and that's what we're doing now. What I'm pleased about is that the more sophisticated money is finding its way down. They're making enough money up here to be able to spend some money down here where it all starts. This is where you make the very big money in this business. You're not making money on the price of gold rising. You're confident that if there is a gold discovery, it's going to be valued at a greater number than it ever was because of the gold price. That's an uptick for the junior investor as well. So I think if I had a magic wand, I'd get back to the place. I believe with this story, Antonio, I've said this several, that we should be trading at 25 cents before anybody even asked anything about us. Just looked at the map. I go back to the map and said, well, how did these guys get this? How did they get Crescat? Who are they? What's going on? I mean, in the old days, if you will, in the days when the junior market was far more aggressive, if you like, that was just the way it was because people were looking for opportunities. And so one of the roads I've taken is through some European investors who have found us and are shareholders and introduced me to you. And I think I'm very impressed with the extent of your due diligence and your willingness to have this sort of interview. I think it's impressive. And I think for your viewers, that's very good and good for you to tune into Antonio. And by the way, the gentleman who I mentioned put some money into our deal, and we're doing a small marketing deal with him. He has seen you. One of his other invested companies met with you, and he spoke very highly of you. So that's a compliment from Canada back to you, Antonio.
Thank you. I appreciate you saying that. I really do. And thank you for that extensive answer. Louis, what about you? If you could.
Yeah, for the magic wand question, for me, I guess any exploration geologist would say bigger exploration budgets kind of thing. And we're not doing too bad with what we have, but it's always a question is you want this pipeline continuously feeding in that. And we're doing great with the MOSO. We started off with nothing and we've slowly been adding in the different exploration programs. As I mentioned before, mapping, prospecting, mag, geochemistry and that. And again, the plan is you want to do this for the other projects also. Again, so that same sort of feeding in the different exploration programs. And then pipeline, continuously adding on extra exploration projects around the area. I mean, what's really nice for us, and Rick mentioned this, is, our 3 projects are in essentially the same area. So there is no extraordinary demob cost if you have to move the drill from one project to another project. It's fairly continuous in that. And again, you have to have all sorts of stuff coming in because these are not postage stamp size projects. These are large regional projects kind of thing. So you need lots of new information. We just don't want to rehash the same old assays, drill holes that's been drilled before. What new information can we bring to it and what new information can we develop outside of those previous drill holes?
Well, I suppose everyone's always looking for more money, and if I'd ask my wife the same magic wand question, she'd probably say the same. I want more money, but there's that, gentlemen. This has been it's been a good conversation. Thank you so much for doing this. I really am looking forward to hopefully having another conversation sometime soon when you're out there drilling.
Thanks, Antonio. Really enjoyed it.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know, and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias, and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias, again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find a company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."